What happens to your rental properties if something happens to you? So, if you're suddenly unavailable, perhaps you're ill or in the hospital, you've had an accident, you're incapacitated or injured in some way, or maybe there's a family emergency and you have to give your full attention to that family emergency. What happens to the day to day rental property business that you've built? In today's real life planning podcast, we're going to talk about building a contingency plan for your rental properties. So, whether you've got one property or 50, this is a really important episode to listen to as part of your personal financial plan for your rental property business. It applies to everyone. So, let's start with understanding what a contingency plan is and how particularly it applies to real estate investors. And what prompted this conversation today with you was I was updating the contingency plan for my personal financial planning business, that real life planning. And it made me think, gosh, every rental property owner needs to do the same thing for their rental property business in a way that applies to the daily tasks of that business. A contingency plan is a written plan or a system that ensures that the rental property business can continue operating if the owner or owners of the business are temporarily or permanently incapacitated. So let's look at that. One, it's written. You must write it down. It doesn't have to be fancy, but it has to be written down and shareable with the person who will take over if you are injured or incapacitated or otherwise unavailable. The written part, again, could be a piece of paper that you share with one of your children. It could be a Google Doc, could be a system like Everplans, for example, which is digital estate planning. Anyway, you got to write it down. This contingency plan answers the questions: who takes over? What happens to tenant and tenant communication? And who pays the bills? So there are operational components and there are financial components. Now, this contingency plan could be implemented with a number of triggers, right? So it could include a medical incapacity like an injury or an accident where somebody is hospitalized for some period of time. Could be a military deployment, very long travel. For example, I have some clients who were thinking about joining the Peace Corps in their 60s for a 6-month stint. They need a contingency plan. And of course, we all need a contingency plan as part of our estate plan. If you don't have a contingency plan, what happens? Let's look at some real life scenarios that could happen in any situation where you are managing your rental properties or you're managing the manager who's managing your rental properties and you are incapacitated or unavailable, right? Real estate is an ongoing business. It's not really that passive. It's only treated as passive income on the tax return, but somebody is still dealing with tenant issues and maintenance issues on a day-to-day basis. So if the tenants can't reach anybody for maintenance or emergencies, that issue could really escalate out of control. What if there were a burst pipe, for example, and the tenant couldn't reach anybody, uh, and perhaps they didn't have the personal financial capacity to try and handle it themselves and pay the plumber? What would they do? It's your property. Your lease says that they must reach you to pre-approve repairs, for example, and all of a sudden they can't reach anybody. That's a big emergency. Bills, the mortgage, the property taxes, the insurance payment, all those things could go unpaid for a significantly long period of time. If you were incapacitated and your kids, for example, didn't know how to get into your rental property accounts and pay the bills or didn't have power of attorney to do that, it could cause this cascading series of events where you default on a mortgage, for example. The property could lose value or income due to neglect. And I have seen this quite a lot with inherited properties, that a client has inherited a property that their parent had stopped, maybe wasn't rented, wasn't taken good care of because maybe they were sick and dealing with end of life issues. They weren't taking good care of the property. And then the person that inherits it is left with something that maybe isn't saleable or rentable. that could cause fines, for example, for unpaid taxes, for perhaps not having a cut lawn, or you can have a lien for unpaid property taxes, that sort of. And the most important thing that we should all consider part of our contingency and estate planning process is we want to make it easier for our family to take over, right? We don't want to leave them a business mess. We want to leave them a clearly run and structured business with workflows and processes and documents and a list of where everything is. You don't want to leave your kids a mess, right? Or whoever you're leaving your rental properties to, you don't want to leave a mess, right? Real estate it is a business and you want to leave it in a business like this. So there are also legal and financial risks to not having a contingency plan, especially think about if you're an out-of-state investor or you own your properties in an LLC, for example. Again, think about the idea you're the business owner when you own these rental properties, whether you own them directly or in a limited liability company, and you've got to have your ducks in a row in terms of business processes. So let's dig into a little bit about how to build a solid real estate or rental property contingency plan and really what's involved in that process. So the first thing is to designate somebody, right? To decide, okay, who is the person that is going to take over if I am injured, incapacitated, out of the country for a long time, right? Decide on the who, and there should be a primary who and a secondary who, because maybe the primary who might not be available or have an emergency of their own when you want to invoke this contingency plan. And so typically that involves durable power of attorney for finances. That's part of your estate planning process. If you own your properties in a living trust, or your LLC is owned by the living trust, for example, your trust may have provisions. But this is something you want to think about as part of your estate planning process. Who's going to be able to make financial decisions for you if you are incapacitated? Or if you're going away for a very long trip, for example, you may give power of attorney for some temporary period of time. Even if you don't give somebody power of attorney, you still have to decide who is the person that is going to know where everything is and how things get paid. Is that your property manager? Is that one of your children, for example? Is that your children supervising the property manager? If you manage your properties yourself, you've got to name somebody who will take over if something happens to you. So this is a trusted family member or friend who knows the business and knows where everything is. Now, in an ideal world, you are, for example, if you want to pass your real estate on to your kids eventually, in an ideal world, you're teaching them about the business as they grow up, as they get older and more responsible. You're sharing more with them, or at least with the kid who's interested in the real estate business. You're sharing more with them about how the real estate business works, who are all the people on the team, where's the account that you're paying your bills out of, etc. All of those things are important to share over time. But let's say you're relatively young, your kids are little, and they're not ready to take over at this time. Then you have to think about, do I have a friend or a colleague who could take over for me? It's somebody who's trusted to you to take over and be a bridge for you until, for example, you're not incapacitated or you're better from being injured. So that who decision, so important. Take your time to think about it. But just like in the estate planning process where you're naming a guardian for your children in case something happened to you, guardian for your minor children, this is like naming a guardian for your real estate business, right? The second step is to document everything clearly. And this could be in an actual, like a binder or a box, or it could be in a digital vault. And there are tools for that online to create a digital vault. And so what do you have to include? So address of each property, the loan info, the bank accounts, all the regular bills. Let's say you pay somebody to mow the lawn every month, for example, the utility accounts, if they're in your name and not the tenant's, the copies of the tenant leases, their contact info, all your vendors, as we mentioned. I would also say like a schedule of regular activities or maintenance. Let's say you're incapacitated in the summer. and it lasts a while. And all of a sudden it's October or November and you have to figure out who snowplows the parking lot in the apartment complex, right? Have all those things organized in your contingency document, right? Then also insurance policies, every landlord policy for the property, your umbrella liability if you have it, just so everything is clear and organized. So if somebody had to take over, they could look through the binder, they could look through the box, and they could pick up and carry on with a minimal amount of hassle. The third thing to think about including in your contingency plan is if you're unavailable, who can your tenants communicate with? And maybe you even want to put that backup contact in the lease. There's an advantage in this situation if you are managing your properties with a professional property manager. You also want to make sure your property manager has a contingency plan for their property management business, but often there's more than one person that your tenant can contact in case of an emergency. But if you're managing your properties yourself, when will you let your tenants know that there is a backup person to reach if they can't reach you? The next step in creating a contingency plan is to think about making as much automatic as you can. And I see this a lot with folks who are maybe older than me, who've been managing their properties themselves for a long time. And they have that handwritten system, maybe a handwritten ledger. They're keeping boxes of receipts, for example, that they tally up for their CPA during tax time, and they don't have a digital system that's automated for collecting rent, for paying bills, for paying mortgages, etc., for bookkeeping and tracking maintenance issues. They're not using property management software, for example. If you're listening to this and you're in that category, you don't have a digital process for managing your properties, want to invite you to think about moving into a digital process for that. And that could take you the better part of a year to implement system by system, maybe starting with rent collection, but investigating different types of property management software. I always encourage people that are starting for the first time and want to do it themselves to look at something like Stessa, for example. It's very easy to use, but you could use a bookkeeper, right? We interviewed a great bookkeeper on the Real Life Planning podcast a few weeks ago, Kristen Ambrose, who has a lot of interesting content about how to hire and work with a real estate bookkeeper. Many property managers use apps like Buildium or AppFolio or Rent Ready, Tenant Turner, for example, to manage their properties. And you can look into some of those. The other thing I think is helpful to include in your contingency plan are what I call workflows, right? Write down your processes for doing certain things. If you were managing your properties yourself, right? What is your tenant screening process? Where do you advertise? Who do you use to check credits? What system are you using for generating compliant leases? Where do you keep your security deposits? When a tenant moves out, what's the checklist for when the tenant moves out? When does property get inspected? How do you decide whether to deduct from the security deposit or not before you refund? So just everything you do in that day-to-day business of managing your rental properties, write it down in a workflow. Now, I like to use software like Asana. You can do a free version of Asana or Trello, for example, to map out your workflows. You can also just make a list in a spreadsheet, on a Google Sheet or something like that. Even just keeping it in a notebook is better than having nothing. So do the same thing like with utilities, for example. When the tenant moves out, how do you get the utility put back in the name of the landlord? Many utility companies have landlord accounts, for example. Have you signed your properties up for the landlord accounts? So it goes automatically back into your name or your LLC's name when the tenant moves out and cancels their service. Think about having workflows for maintenance. When a tenant requests something, who do you call? How do you document? Do you take competing bids, etc.? Think about workflows for financial. tasks like paying bills, paying the mortgage and the property taxes and the insurance, any other vendors that you pay on a regular basis, like pest control or landscaping or snow removal. So just think about writing everything down. And finally, the next thing to include in your contingency plan is what other professionals need to be involved if something happens to you. So make sure that whoever your trusted person is, they know who your accountant is, they know who your financial planner is, your insurance agent, etc. So that you know all the people involved in your real estate business in case they need to contact. So you're working on your broader contingency plan. And I encourage you to check out the checklist that we have created that you can download from the website about what the basic elements are of a contingency plan that we've been talking about here. But I want to encourage you to think about making a rental property emergency pack. This is not your big binder or your big real estate contingency plan, but this is like something you would leave your spouse or your other trusted decision maker, like one of your children. That is just a simple document in a secure place that has a list of all the properties, who the tenants are, a snapshot of the cash flow, logins for key accounts, a list of who to call, like the property manager's phone number, the attorney, the CPA, the handy person, like whoever's involved in your real estate business. That's something you want to share the location of. You want your trusted person to be able to get at that easily. I've been a financial planner since 1997, and I have seen a lot over time is that one spouse in the relationship takes care of all the bills. Or maybe one spouse takes care of the personal household bills, but the other spouse takes care of the real estate business. And they're siloed, right? The other spouse doesn't know where everything is and doesn't know what the systems and the processes and the important people are to contact in case of an emergency. So it's important that your spouse, if you're married, it's important that your spouse know what these things are. Even if they're not helping you manage the day-to-day business of the real estate, they need to know where things are and what to do if you are incapacitated. So not only should your trusted person know something were to happen to both of you, but you want to make sure that both spouses know how to access these things in case of an emergency. So that's what goes in a real estate contingency plan. In a nutshell, like all emergency and estate planning, this part of the financial planning process is often the most difficult for people to tackle, but because it requires us to face the possibility that we have to prepare for possibly being injured or incapacitated or passing away. And that's not fun. Nobody likes to think about it. So oftentimes folks put this off, but I encourage you to do it. You'll feel great when it's done. Please download your contingency plan checklist for rental property owners. We'll have the link below in the show notes. And I encourage you to listen to a future episode about estate planning for real estate investors. I hope you are going to create this fantastic real estate contingency plan for your family. It's a gift to them. And I hope that you won't have to use it for decades of time. See you next.